But there's a couple of things that have been difficult traditionally. So I like this puzzle piece, but it also has like the little constellation connections here. There's data that we may be missing or not knowing which areas to focus on, but more importantly, how does it tie back into you as an organization? So where we see a lot of people miss is you might have a strategic objective that in certain instances, your trend following is going to be different than the individual organization across the street from you because you do business differently. But it has to be a connection in between the two. And if I have data scattered all over the place and using traditional tools like spreadsheets, it's really hard to have good connections across those to give you a holistic picture. If I think about a spreadsheet, it's a grid, right? You only have a limited number of dimensions that you can start to look at for an intercorrelation and starting to see trend analysis across different perspectives. So I'm going to start this back by just saying, one of the biggest things, and Ken and I love this concept here, but the risk appetite. One of the things that came up on that is your risk appetite aligned to strategic objectives, and then does it flow down into the forward-looking metrics and risk statements and controls that you have in place. So if you truly have an appetite that is aligned with the amount of risk that you're ready to pursue, and you are monitoring the right metrics that you have made your assumptions on, then this is going to allow you, if you're looking at it in real time, to be able to compare and understand what's happening, even as changes occur throughout a year. Now, I know a lot of organizations will look at a risk appetite either on a quarterly or even an annual basis and say, yeah, we generally like this, or this is what we're wanting to do. But then when it comes down to monitoring this in real time and understanding the implications of where things are changing at any point in time, maybe take the eyes off the wheel a little bit, or maybe you just don't have a technology that allows you to see the interconnection from strategic objectives down into your corporate risk profile and into your risk appetite, how that flows into those project initiatives that you're executing, into the metrics and where those are hitting those tolerances, so that as things start to go outside of your expectation, whether it is a risk that you're monitoring from an assessment, whether it is a metric that's a little bit outside, how do I know about it immediately so I can start investigating and taking action in a very proactive way? So Ken was so kind to show a few examples. Again, risk appetite example. This is a great example of where you might have some different categories of risk that have some strategic objectives in line with it, along with some commitments and policy guidelines. But when I take this now to a board for an hour or 2 hour meeting, and we need to have some action or make some decisions on this, where do you start? I've got paragraphs here. I've got a lot of information. I've got some target ratios that's not updated with real-time data or a trend. It may make a huge difference if I'm looking at a particular guideline and I'm just approaching that versus I'm coming down for being grossly over my policy guideline. So taking information like this and starting to understand how it's all correlated can help the executive level and actually everybody in the organization understand their role and how that helps the bank or the credit union, the financial service organization be more successful. So this is an optimized risk framework that we've seen be pretty helpful in just kind of explaining where these touch points are and where we can really start to see the correlation. Again, this can be difficult in spreadsheets and Word documents where there's paragraphs of information and it's not easy to connect different pieces of the area. But ideally, you're going to have a strategic or capital plan that is going to absolutely determine what your risk appetite is. It's going to absolutely help you inform what are you trying to do as an organization? Where are you willing and what amount of growth and risk are you willing to take? So you got to start with this piece. And again, a lot of organizations will start with that at the very beginning. If not, you absolutely should be connecting those two, but also understanding, well, how do I understand in real time how well we're tracking to that strategic plan and to that risk appetite? So coming out of that, you're going to determine some risk tolerances, really understanding, here's my appetite, but where do I need to start being worried? When things don't happen like I expect them to, surprise, surprise, that actually happens. But when they start happening, when do I want to know about it? And this usually splits into two areas. And the challenge we've seen in a lot of organizations is that these can become two extremely siloed directions. One is setting my internal RCSA process on this top row. I have a risk methodology and taxonomy. This may be done very differently across the organization. My operational risk team, my financial risk team, or interest rate risk team, credit risk team may do something very different with my methodology and taxonomy than my regulatory risk team. So I'm not necessarily getting a good relative understanding. And then establishing my risks, my controls, my testing procedures, so that I have a good idea when, at least from my internal view, things are not operating as expected. But as Ken mentioned earlier, that's only a piece of the puzzle. It's a big piece and one that regulators require, but it's only one piece of the puzzle. The second one is coming down to this lower piece. I've got these risk tolerances. Those should filter into my policies and guidance, limitations, all of my regulatory guidances here. And now I need to be able to track that with KPIs and key risk indicators that tell me when I'm not meeting this, or when I'm getting close to not meeting those. You don't want to wait until after you're outside of a policy holistically. I want to know as I'm starting to trend towards something. So how do I match performance to tolerance in a way that drives insight? And again, these two areas, your top row and your bottom row, in many cases are their own dedicated swim lane with no interaction or correlation across it, unless it's maybe at that quarterly committee meeting or quarterly executive meeting where you say, okay, everybody has pulled this information and look back the last 6 months and try to put together a few PowerPoint slides and a few spreadsheet charts to try to figure out where things aren't working. This section here where you're monitoring your key risk, your predictive risk score, and extrapolating it out to look forward is where this value and insight comes into play. I need to understand my internal view on how well we're executing to what we say we're going to do. I need to understand how well we're following that policy. I need to understand where the market and my peers are sitting at the same point in time. So how do I do this in a consistent way, and in a way really that allows me to surface the areas of concern, surface the areas of opportunity, so we can make better decisions? So call this our optimized risk framework, but historically, this has been a little bit of a challenge. There hasn't been a lot of technology to support the people and the processes in place here. And let's be honest, spreadsheets just don't cut it. There's too much information to try to connect across these different formats of data to pull it together. So you have to have innovative technology designed specifically for being able to make these connections with really a unified risk and compliance database that connects back to your strategic initiatives.